Investors, another week down, another week worth of dollar cost averaging before we close out the rest of the month here in the last week of August. But I want to share with you what exactly I've been up to, what I've been buying, and just dive into my portfolio tracker with all of you. So should any of you want to follow suit on my investment moves, you can do exactly that. With that being said, let's dive right in. Now, this past week, we really didn't get any new macro news bites in terms of what we didn't already know. So it was really relatively calm. And with some sprinkles of, say, news bites from the Federal Reserve's latest FOMC meeting minutes to Jerome Powell speaking at the Jackson Hole Symposium this past Friday, what we know right now to be true as of this moment in this video is that rate cuts are favored in September if inflation continues to cool. So I personally didn't go crazy on buying anything like I did weeks back when the market was in the red. But jumping into my Gitcoin portfolio tracker, we could see first and foremost, officially I crossed the $200,000 mark in my brokerage account, sitting at $201,443.73, which just a couple of weeks ago, I said it would actually take some months to hit, but now just in a couple of days. Why? Because actually what I shared would happen is finally happening. As we begin to talk more and more about rate cuts, every investor and their mother out there is getting incredibly bullish. And now here we are, which you could see depicted on the steady climb there in this past week of green, as the whole week headlines just continued to read about rate cuts and we're getting really ramped up. Now, I really want to focus on what exactly I'm doing in terms of the makeup of my portfolio, because last week we saw that I was actually stock heavy over 50% of my portfolio. But now we could see a different split, whereas I'm weighted 49% in stocks and a tad heavier in ETFs at 25.6%, before mutual funds at 15%. Now a much heavier cash position coming in around 10% of my portfolio. So if you're asking now what my big game plan is, well, I want to remain heavier in individual stocks, but I'm going to continue to narrow in on a select few of them while remaining very safe with the broader market in ETFs. And the reason being, well, the strategy in and of itself just works for one. But also, just because the longer I invest, the more it really hits home that concentration is what's going to be key to actually breeding wealth. Now, is that riskier? Perhaps, but also with my backbone really in ETFs, I feel I cannot lose. So you'll likely continue to see me growing my positions within ETFs. And sector-wise, these ETFs, of course, tailor a different split. As we can see now, once again, I was over 50% tech-heavy last week, but now coming in at roughly 44.4% of my portfolio in tech, 13.4% in consumer discretionary, 12.7% in healthcare, and so on and so forth. But again, we could see a solid mix of more risk followed by, well, safer sectors to buffer any major market blows, which all leads me to talking about my positions, with the biggest chunk with Vanguard's Total Stock Market Index Fund, which was my very first investment. That remains, of course, my largest position, with over $30,000 invested there, equating to about 15% of my portfolio, before I work my way into the largest individual stock position with Apple at 13% of my portfolio, another chunk in Vanguard's Total Stock Fund, equating to roughly 11.9%, and a much fatter cash position, as I shared, coming in at nearly $20,000, which I want to talk more about in just a hot second. But then we have Alphabet, which stake is at 9.9% of my portfolio right now, another 9.7% in Vanguard's tech ETF, VGT, followed by Johnson & Johnson at roughly 8% of my portfolio in Vanguard's S&P fund, ticker symbol VOO, coming in around $8,000 or 4%, before I completely spread into my dividend stocks like Realty Income, Lockheed Martin, Visa, and all the alike. Now, before I talk about my recent buys, I want to discuss this growing cash position that I have of mine, because $20,000 is quite a large chunk of cash to have laying around. And the first addressable point is the fact that thanks to Vanguard's settlement fund, which is actually money that is invested into their federal money market fund, is going to accrue a heck ton more of interest, coming in with a compounded yield of 5.39%, which is not too shabby while remaining incredibly safe, given the money is actually invested in repurchased agreements and treasury bills. This is really my way of telling all of you, not only am I using this settlement fund like a high-yield savings account to generate more cash until I actually see an investment that I really want to load up on, but you should be doing the exact same thing, contingent upon how your brokerage invests the money that sits on the sidelines for you. And it's just far better to take this approach than, say, letting all your money disintegrate in a bank account, generating almost next to nothing in terms of interest. But with that out of the way, let's get to it with my weekly buys, with my first being Amazon, which I want you to take note of the fact that it remains down in the red right now, trading for $176 per share. That's down from nearly $200 months back. And think big picture here with Amazon. As we zoom out out to see over 926% worth of appreciation over the last decade, to which I only see a brighter and greener future with Amazon, especially once rate cuts kick in, come into play, spending picks up on all fronts with consumers as well as businesses with their desire for cloud infrastructure, which just continues to be a dominant revenue machine for Amazon thanks to AWS. Now, analysts remain very bullish, forecasting over 27% worth of upside, bringing the share price up to $224.85, all while hedge funds are also very bullish and loading up on more shares. So I went right ahead to score 2 more shares for $180.15, totaling $360.30, and bringing my share count up to 25 shares worth of Amazon in my portfolio. Now, on top of that, I went ahead to snag just 1 more share of Alphabet as it slid a tad this past week. Clicking in for more, we can see it fell to $163 per share as Google is now facing 2 separate but parallel antitrust cases, which keeps it in the negative news spotlight. But think long term with Google and zoom out to see over 462% worth of share price appreciation, which I would only predict will continue to be the case for Google as it remains the one and only dominant search engine for all of us, while continuing to evolve, of course, in the AI arena. And recent forecasts show that YouTube, which is owned by Alphabet, is well positioned to capture over $158 billion of linear TV ad spend. Now, thanks to Google being a dividend investment with a 0.49% dividend yield, I am just all over it. And I bought another share worth of Google for $165.05, bringing my share count up to 122 shares worth of Google in my portfolio. Now, finally, just staying true to my dollar cost averaging strategy on Vanguard funds like VOO, which is their S&P fund, or Vanguard's tech fund, VGT, I bought shares worth of both, totaling $1,088.24, meaning I spent a grand total this past week of $1,613.59. But investors, now I want to know what you are busy buying, or if you are sitting tight on the sidelines waiting, what exactly is your big game plan to close out the month or the year? Let me know down in the comments down below. Of course, catch more insights right here, but before you click away, be sure you're subscribed to the channel.